Food inflation accelerated to 7.3% annually in January. Now, that surge mostly tied to the federal government's tax holiday that was brought into effect a year earlier. It's now over. Let's get more on this from Dana McCauley, CEO of the Canadian Food Innovation Network. And Dana, thanks as always for joining us.
Oh, it's good to be here, Roger.
Not so much the numbers, though, that we're looking at. 7.3%. I know that's tied in with the tax break we had at the time, but still a concerning number, though.
It is. I know even if you take out that echo effect, of having the GST holiday last year that, so many Canadians took advantage of to eat out more often and to, kind of splurge on some of those fun foods. We still see that food is one of the most vulnerable parts of the economy, and that the recent shocks to trade, et cetera, have an outsized effect on our grocery bills.
And I know we saw there was a bit of a break, I think, on fruit. We saw some prices there dropping. Where do we see some increases, though? What was hardest hit?
Well, of course, things that are in cans, anything that has to do, with tariffs, we're seeing issues there, and foods that have been impacted by supply chain issues to do with weather. Of course, that's interesting as well. And I'm one of the Canadians who has, committed to buying as much Canadian food as possible at the grocery store, and then anything other than U.S. food if I can't satisfy my needs that way. But of course, when I'm buying, pomegranate from Greece versus a pomegranate from the U.S., there's a whole lot of supply chain and a lot of demand on those products that, is putting upward pressure on the prices. So the imported foods are definitely a big part of this.
And does it feel like it's calming down a little, or are the numbers showing that it might be calming down a little, or is there more to come?
It does seem to be, easing a bit. Generally, inflation is down, and I think the GST holiday that the Prime Minister, or the GST rebate, sorry, the holiday was another Prime Minister ago, but this GST rebate that people are going to get is a nice Band-Aid that if consumers choose to use it to buy groceries will be helpful. But we really do have some systemic issues, and the government did acknowledge that, their investment in the Strategic Response Fund and the, depreciation incentives that they put on greenhouses, that shows that they are thinking about how to fix the agri-food supply chain to make it more shock resistant and to help Canadians to at least expect prices to stabilize, if not to go down. And
what would you like to see them do there?
Well, I think, the big issues that we see are that, Canadian companies who are producing and manufacturing food, they need to be modernized. They're using, in some cases, really outdated technologies that don't allow them to have different ends of the supply chain speak to one another. So they have losses in inventory and they miss, all kinds of opportunities to reduce their labor costs and to avoid waste. So we really, really need to incentivize companies to adopt technologies that will make them more productive and more competitive, and that help to connect the various types of steps along the supply chain so that they're just more seamless and, more integrated.
And are we starting to see companies do that, or do many feel they kind of have to sit right now on the sidelines almost and wait and see how everything resolves itself when it comes to the tariffs and CUSMA next?
I think there's a chill over a lot of spending. A lot of people are trying to figure out, what is my market and who do I sell to and what price points do I need to hit. FCC's announcement last week that they will be taking together a consortia of investors and putting $5 billion into agriculture and food companies before 2030. I was in Ottawa last week at a lot of the ag Day Canada events, and there were a lot of people going, oh, okay, and that's loosening them up a little bit. But we really, we really need to get some continuity, and people need to feel, and by people I mean the business owners, those food innovators who are running companies, that are creating food and the solutions that those companies need. Those folks really need, an injection of cash and some confidence that what they do today will still matter tomorrow. It's been radical optionality every day for since the pandemic, basically, and there's a lot of people who are waiting.
And just looking one last thing I want to look at here, the restaurant meals 12.3% jump year over year, again because of the breaks there, but the restaurant industry is struggling, and that can't help it knowing the prices have gone up that much. It's more than just food there, isn't it?
It is. There's the labor cost, of course, and rent and fuel and lights and all the things. Every input for a restaurateur has gone up, and they are struggling. Some of them are negative margins. There's one prediction that we'll lose 4,000 food service outlets in Canada in 2026. And interestingly enough, as we market ourselves as a tourist destination, a lot of that's predicated on the food culture that we offer. And if we don't have a healthy food service sector, that's kind of a promise we can't deliver on. So we really need to figure out how to very quickly help the food service sector to level up their use of technology and get their pricing in order so that we can have those places to go to, because they really do create the vibe in Canadian cities, and we depend on them not just for food but for a lot of our culture.
Okay, we'll have to wrap it up there. Dana, thank you very much for joining us, though.
It's a pleasure. Thanks so much.
Dana McCauley is the CEO of the Canadian Food Innovation Network.